Introduction to Forex trading. This is a complete beginner's guide. Let's say, for example, you are just new to Forex, you are hearing Forex for the first time, or you want to know the beginning, that is the basics of Forex. This video is for you. And then if you've started Forex trading, but there are some concepts that you don't really understand, or there are some things you really need to understand practically in the simplest term, then this video is for you as well. This video is going to equip you know the Forex fundamentals, the basis of what Forex trading is in its simplest terms, with the most illustrative example. This very course is guided to beginners and to people that are already trading but don't know the basics of Forex. So all of this I'll be discussing in detail in this complete course. Pay attention, watch the video gradually all the way to the very end. It's a very important video. The question we should be asking is, what is Forex? First thing first, what is Forex? So Forex trading is a very simple stuff. So just as the name implies, Forex, you see, F-O-R-O, this F-O-R-O right here mean foreign. That's what it means, foreign. Okay, Y-E-X, as you can see at this very point, mean exchange. That is where the name Forex is derived. So you can say Forex. So Forex, in simplest term, the F-O-R-O mean foreign and the E-X mean exchange. That's what it means, simple. So you can simply put Forex trading, FX trading, spot trading. You are all saying the same thing. So pay attention to this. Don't forget that is where it is gotten from. And this is very important. The next thing here, which is also very key, is if you look at the world right now, discover that each country have their stock exchanges. We have the Nigerian Stock Exchange. We have the London Stock Exchange. We have the Tokyo Stock Exchange. We have the New York Stock Exchange. Now, statistics make us to understand that, or data make us to understand that the New York Stock Exchange have about or almost exceeding $22.4 billion day trading volume. When we talk about day trading volume, we are talking about buy and sell transaction. Okay, buy and sell transaction. If you put them together, that is the volume for the day. So the New York Stock Exchange, the buy and sell volume for the New York Stock Exchange exceed or about $22.4 billion, which make the New York Stock Exchange, which is the NSE, the most liquid stock exchange in the world. That is the most stock exchange that have the highest volume in the world. So we can compare this stock exchange to that of Forex trading. We can compare the volume to that of Forex trading. The Forex market exceed $6 trillion day trading volume, just like the New York Stock Exchange is about or exceed $22.4 billion day trading volume. So when we say the Forex market exceed $6 trillion day trading volume, we're talking about the sell and the buy transaction. If you put the volumes together, it exceeds $6 trillion. And this is very important. So this makes the Forex market the most liquid market in the world. That means the most market that have the highest volume by transaction, buy and sell transaction. So pay attention to this because it's very important. As a Forex trader, you should know the amount of money that is in such a market. So the Forex market is the largest market in the world, and that is why any person can participate in it, any person can trade it. And if you don't know how to trade it, a lot of videos on this channel that will guide you through how to get that started, especially with this very video. This is where everything gets started. So watch the video all the way to the very end. Forex, what is traded right there? What can you trade on the Forex market? This is an important question that everybody should be asking. So the things you can trade on the Forex market is, first of all, the US dollars. And if you look at it right here, the US dollar on this very pie chart contain 88.5% of this very volume. So we talk about buy and sell volumes, then we are looking at 88.5% of the buy and sell volume involve the US dollars. The next thing we see here is the euro. This is what is traded, the euro, and the euro constitutes of 30.5% of the trading volume. That's $6 trillion. The euro is 30.5%. We have the Japanese yen, which constitutes 16.7%. We have the Great Britain pound, which constitutes 12.9%. These are data. We have others right here like the Australian dollar, we have the Canadian dollar, we have the Swiss franc, we have the Chinese yen, we have the Hong Kong dollar, we have the Singapore dollar, and others, which constitutes 22.5%. This is very important. So these are the currencies that are traded in the forex market. These orders involve every other country's currency aside dollar, euro, Japanese yen, Great Britain pound, and all of the other ones right here. This very one constitute every other currencies in the world that is on any exchange. So these are the currencies that are traded in the forex market. So we can say the most traded range from the US dollar to euro to Japanese yen to Great Britain pound to Australian dollar to Canadian dollar to Swiss franc, that's the chef, to Chinese yen, then to Hong Kong dollar to Singapore dollar, then to others. Okay, that is how it goes from here all the way to this very area. So this is very important. Pay attention to this. So obviously we can say that the only thing that is traded in the forex market is currencies. So when we talk about forex, we're talking about currency trading. So it's basically currency trading. That is what is traded in the forex market, and this is very, very important. And as this pie chart indicates, the most traded is the ones that have the highest percent right here. Okay, and it goes in this format, in this very direction. So this is very important. Pay attention to this as well. It's very important for you to know what is traded in the forex market and know the one that are highly traded in the forex market too. So this is what you have to pay attention to. The next thing you need to know as a beginner in forex trading is this. That is the symbol, the country, the currency, and the nickname. This nickname is very important because most people or brokers use this nickname in their listing. So if you don't know them, it will be very difficult for you to find them out. So we have the first one here, which is USD. Of course, it's from the United States. That's the country. And the name of that very currency, I mean, the US currency is the dollar, and the nickname is BOG. Very important. Some people don't know this, BOG. And we have Euro, the European members, that is all the country in the Eurozone. Okay, all the country in the Eurozone, except few ones, which I'll talk about in this very video. We have the currency Euro, and it is named Fiber as the nickname. We have JPY from Japan. The currency name is yen and yen. We have GBP, Great Britain. The currency name is pound right here. And the nickname is the cable. You can say, I trade the cable today, or I trade bulk today, I trade fiber today. Okay, these are nicknames, and you need to understand it as a forex trader. Very important. The next one is CHF, that's Switzerland, which is an exception. Switzerland is in Europe, but they don't use euro, okay, as their currency. So we have franc, okay, that is the name of their currency, franc. So we have Swizzy as the nickname. The next one is AUD, Australia dollar, very important. And we have here Aussie. The next one is Canadian dollar, okay, which is Loni. And the last one, NZD, which is New Zealand dollar. And we have the Kiwi, which is the nickname. So these nicknames are very important. Pay attention to it. As a forex trader, you should know the nickname of these major currencies that are mostly traded in the forex market. The US dollar is the king in the forex market. Okay, so yet we'll talk about the US dollar being the king in the forex market. Why is the US dollar the king? If you look at that chart that I brought out right here, you discover that the USD occupy 88.5%, okay, of the entire currency that is traded in the forex market. So why is the US dollar? Because of this dominance, the US dollar is the king in the forex market. And that is why we want to look at why the US dollar dominates the forex market this way. Not only the forex market, a lot of transaction, cross-border transaction, you must have to use the US dollars. So why is it the king when it comes to foreign exchange trading? The first reason here is that the United States economy is the largest in the world. Okay, so the US have the largest economy in the world by far, above a lot of countries. If you put China, put Russia together, put all of those countries together, they are not equal to the US economy. It's the largest by far in the world, so they dominate the world. The second reason why the US dollar is the king in the forex market is because the US dollar is the reserve currency of the world. Very important. That means World Bank have much reserve in the US dollar, more than any other country in the world, more than any other country's currency in the world. And this is very important. The next one is that the United States has the largest and the most liquid financial market. I talked about that earlier, which is the New York Stock Exchange, NSC. The New York Stock Exchange is the most largest and liquid market in the world. You cannot compare the Tokyo Stock Exchange to it. You can't compare the London Stock Exchange to it. You can't compare the Nigeria Stock Exchange to it. It is the largest by far, okay, which makes the dollar a dominant factor when it comes to foreign exchange trading. And the next one, which is the fourth reason, is because the United States has a more stable political system. We are not saying they are perfect, okay? No system have a perfect political system. But if you look at the United States, they have a more stable political system. And because of that stable political system, there is this balance of power and distribution of power among the various arms of government, which enhance the stability of the dollar as well. Very important. Number 5 reason why the US dollar is the king in the forex market is because the United States is the world's sole military power. Nobody has taken that place from them. So if you're talking about superpower in the world when it comes to military, is the United States. In fact, their military budget is about $1 trillion. $1 trillion. If you combine the military budget of China, Russia, is not up to the military budget of the United States. As at this year, 2025, the military budget of the United States is almost $1 trillion. This is massive, and it makes them the sole military superpower. The next reason, which is the sixth reason why the US dollar is the king of the forex market, is because the US dollar is the medium of exchange for many cross-border transactions. When it comes to oil, oil is pegged in the dollars. You have to buy oil through the US dollar. This is very important. So these reasons make the US dollar the sole dominant in the forex market. So we call it the king in the forex market, which is very important. You need to pay attention to this. The forex market is a 24 hours market. From Monday, you can trade the forex market on Monday. You can trade the forex market on Tuesday. You can trade the forex market on Wednesday. You can trade the forex market on Thursday. And you can trade the forex market on Friday. So the forex market closed on Friday with the New York section, okay, that is the US section, and then opens on Monday with the Asian section. Very important. It opens on Monday with the Asian section and close on Friday with the US section, okay, or the American section, or you call it the New York section. Anything you call it is correct, okay? And this is very important. Why is it closing on Friday? Because it's weekend. The stock market close on Friday, so the forex market close with it, and people go for weekend and then come back on Monday for trading with the Asian section. So it is a 24 hours market from Monday to Friday. It does not exceed to Saturday or Sunday, okay? You don't trade during those periods because there is nobody trading at that time. People are enjoying their weekend. So the forex market is a 24-hour market. Pay attention to that. The next thing here is forex trading section. Forex trading section is divided into three main categories, but you can subdivide it into four, which is very important. The first one is the Sydney section. Okay, the Sydney section is the Australian and the New Zealand section, which start from around 10 p.m. okay, Nigeria time, a.m. Nigeria time, which is very important. And then the Tokyo section, okay, that is the Japanese section, starts around this period, okay, where we have 1 p.m. right here, 1 a.m. right here, and extend into 10 a.m. in the morning. Very important. Why this is ongoing, the London section start by 8 a.m. right here, 8 a.m. extend into 4 p.m. Very important. Why the New York section start by 1 p.m. okay, and extend like that into this very area 10 p.m. and then the Sydney section starts. So you discover that it overlaps each other. It runs 24 hours. When this section is ending, this other section starts. When this section is ending, this other section starts. When this section is ending, this other section starts. So that is the beauty of the forex market. Anytime you go right there, you see liquidity in the market. You see people buying and selling. So it makes the market more liquid. You can see buyers and sellers anytime you come to the forex market. So it is a 24 hours market. Now, obviously, if you look at some platform, you will see Asian section, London section, and New York section. The Sydney section and the Tokyo section is combined together and called the Asian section. Okay, so Asian section is these two, which is very, very important. So this is the Asian section of the market, but you can subdivide it into the Sydney section and the Tokyo section. Of course, Sydney is in Australia, which is very important. So this is what you need to understand about these various sections. And like I mentioned earlier, these various sections overlaps each other, and that means anytime you go right there, you must see buyers and sellers. People are buying and selling foreign currencies. So pay attention to this, know this, because it's very, very important as a forex trader. The next thing is best time to trade the forex market. In as much as a lot of markets have the best time you should trade it, just like the London Stock Exchange, it's best to trade the London Stock Exchange in the morning when the stock market opens. It's best also to trade the New York Stock Exchange when the stock market open. That is around 1 to 2 p.m. Nigerian time. It's very important as well for us to know the best time to trade the forex market so that you can take advantage of that very moment. That is the best for you to trade, because when you see best time in the market, that time you see buyers and sellers, more volume in the market, you see liquidity, and meaning that you can make a lot of money during that period because you can see price movement up and down. So the first one here is when two sections are overlapping, and we see that when I was talking about this very area. If you look at it, the Sydney section right here overlap with the Tokyo section, very important. And we see the Tokyo section overlap with the London section right at this point. And we see the London section overlap with the New York section. Okay, so this section means that when Sydney people are trading, Tokyo people are trading as well. It means that there is more market participants. It means there is more cash flow during this period. When Tokyo section is trading, London section open, more cash flow into the market. When London section is still open and the New York section opens, it means also more cash flow in the market. So what that means is a lot of liquidity comes into the market when two sections overlaps. So you see buyers and sellers in the market. You see volatility. Volatility means price movement. So you can see price moving up and down, and you don't see price stabilizing at a very particular point. And this is very important. So it's the best time to trade when two sections overlap. The next one is the European section tends to be the busiest. Very importantly, the European section tends to be the busiest. And if you look at the Eurozone, you discover that the Eurozone is very, very large and big. So the European section, look at it right here, tends to be the busiest. And the European section is the London section. So you can call it the European section, okay, which is the London section. This is the same thing as the London section. So you can call it the European section or the London section. It tends to be the busiest because a lot of countries outside Europe fall in this zone, especially those in West Africa. A lot of people are trading within this very time frame as well, and we need to pay attention to this because that means there will be a lot of volatility during the European or the London section. So the next one is midweek days. Okay, midweek days tends to be the busiest. We talk about midweek days. We're looking at Tuesday, Wednesday, and Thursday. Okay, that is midweek days. Tuesday, Wednesday, and Thursday. You see a lot of volatility this period. Why? Because on Monday, traders come back on Monday and then they begin to do analysis. Look at how the market is going to play out. So people have to wait, do analysis, get setups before they can actually begin to trade. So on Tuesday, everything is set and then they want to push into the market and begin to take trades. Wednesday, market is still going well. Thursday, market is still going well. Friday, people are already preparing for weekend and closing their position. If they take position on Monday or Tuesday or Wednesday, they want to close that position and go for weekend on Friday evening. So Friday evening, you see volatility dies down, which is very, very important. Pay attention to this. It's very important for you to know, especially as a forex trader. So what's time to trade the forex market? In as much as we have best time to trade the forex market, we also have worst time to trade the forex market. And this worst time, you need to know them so that you avoid trading during that period. Very important. The first one here is on Sunday. Everyone is sleeping and enjoying their weekend. You don't want to trade on Sunday. You won't see volatility, okay? Nobody's trading at that period. So there is no need you trading on Sunday. The second one is on Friday. You see, during the last part of the US section, volatility begins to die down. So you don't trade that period, especially on Friday evening. Volatility is coming back all the way to the downside. Price movement is dropping. People are closing their trade, preparing for weekend. You don't take trade those periods. Relax and wait for the market to open on Monday, Tuesday, and take your trade. So on Friday, don't take trade during the last part of the US section because volatility is coming all the way to the downside. The next one is holidays. When there are holidays, bank holidays, break, for example, December, or you call it Christmas holiday. This period, market volatility is always very, very low. For those of you that have traded Forex and you've noticed this during December period for the Christmas holiday, comment below in the comment section of this video. It's one of the times that you see the most dull momentum or volatility in the market. You can check it out on your price action as well. During Christmas holiday, if you look at it, you will see a very dull price movement during this period, and you don't trade this time because there is no volatility. People are on break, on holiday. Another time is major news events. Major news events are time where market sentiment is very high. Market can spike up, come back down, spike up, come back down, and without any, precise direction. So during news events, you don't trade. What I advise people do is you leave your trade before the news and trade after the news. Okay, so during the news event, don't be in the position because you can see what you call a whipsaw in the market that can take you out of the position, and then maybe market can still move in your direction. So what I advise is during news event, go off a position, except you want to take the risks. That's okay. But during major news events, don't take trade, except you know how to trade the news. If you know how to trade the news, that is okay, that is fine. You can continue with it, but you will have major movement as a result of spikes from those news. The next one is during American Idols and NBA final. This period, you see low volatility in the market, so it's not advisable to trade during this time. Very important. The next thing here is how to read a currency quote. Very important. How to read a currency quote. So how do you read a currency quote? So in general rule, each currency has a 3-letter symbol. You can agree with me that every currency in the world have 3-letter symbol that is used to quote it in the forex market. The first 2 letters identify the name of the country that currency is coming from. And then the last letter, which is the 3rd letter, is the country currency name. So the name of that country currency. Let's say, for example, we have some example here. We have the AUD, which is Australian, and then we have the D, dollars. We have JP, Japanese, and we have the Y here, yen. We have CHF, Swiss franc, which is a little bit different naming. And then we have Canadian dollar, CA, Canadian, and D, dollar. We have NGN, NG, Nigerian, Naira, okay? N is for Naira. So we have SGD, Singapore. They use the dollar, okay? So Singapore dollars. We have South African rand. Instead of S, we have Z, ZA, South Africa, and we have R, the rand. And then we have the almighty US, United States dollars, okay? The D here represents the dollar. And we have Great Britain pound. So GB, Great Britain, that's what the GB mean. And then P is the pound. So that is how you read a currency quote. This is not currency pair, it's a currency quote. So if you see a currency quote, you'll be able to identify the country and then the currency. How to read a currency pair. Very important. How to read a currency pair. The first one here is, let's say, for example, we have 2 currency pairs, Euro/USD. Euro/USD. So this is the European Euro and the US dollars. If you look at it, the Euro is on the left, while the US dollar is on the right. Always know that the currency on the left, for example, in this case, Euro, is the base currency. We call it the base currency. While the currency on the right, in this case, US dollar, is called the quote currency. You can also call it counter currency. Very important. Let me repeat again. If you look at this very pair, Euro/USD, if you want to read a pair of currency, Euro, because it's on the left, is called the base currency, because any currency can be on the left. Any currency that is on the left of a quotation is called the base currency. It can be USD, it can be anything. But if it's on the left, as you can see right here, that currency is called what? The base currency. While the one that is on the right, it does not matter whether it's USD, JPY, Canadian dollar, Australian dollar, any currency at all that is on the right is called what? The quote currency. Another name for quote currency is counter, okay? Counter currency. So you can call it quote currency or counter currency, is the same. So this is how you read a currency pair. Now, as a matter of fact, you have to understand that currency trading is not like stock trading. Stock trading is traded alone. Let's say, for example, you are trading the S&P 500. If you are trading the S&P 500, you discover that the S&P 500 trades alone. You buy the stock and allow price to move, and then you sell off the stock to collect profit. Currencies are not traded that way. Currencies are traded in pairs. You need this one for this one to go. It's not that you buy euro and keep it. If you want to make profit out of it, you have to convert it to US dollars. Or if you sell US dollars and US dollar drop all the way to the downside after selling it, that means you sell at a higher price and then it drops, convert it to euro, you are making money. Okay, so this is very important stuff. Currencies are traded in pair, they are not traded alone. Very important thing to note. Unlike stocks, if you go to the stock market, you see stocks are quoted alone. If you go to the forex market, currencies are quoted in pairs. That is why we have this very important illustration right here, so that you understand that they are quoted in pairs. You can't trade only US dollar alone, or you can't trade only euro alone. It does not exist like that in the forex market. One further explanation, if you look at this, you see, to buy 1 unit of this base currency, which is the euro, you must sell this much quote currency. So what that means is, for example, we say euro, which is what we have right here, slash USD is equal to 1.2042. What does this mean? Let me explain again. Euro slash USD is equal 1.2042. What does this number mean? What this means is, for every 1 euro, that's what this 1 unit means. For every 1 euro, you're going to exchange for $1.204. Very important. So for every 1 euro, you're going to get $1.2042. In the other way around, you can say you use 1 euro to buy these dollars, or you sell these dollars and get 1 euro. In other way, this is equal to this. So if this is equal to this, it also means this can also be equal to this in that equivalent. That's what it means in the forex market. So pay attention to that. So when you go to your chart, let's say, for example, in this very case, we have Euro USD right here. And you see Euro USD right at this very point, Euro USD from the forex market. And you see this price. This price is here, is the price of the dollar. But since you already know that euro is on the left hand side, so is the base currency, and it's always in 1 monetary unit. 1 monetary unit. 1 monetary unit. Don't forget that. 1 monetary unit equal the price that is here. Okay? Equal the price that is here. It does not matter where this price is at that time. What matters is, at this very point, this 1 monetary unit is equal to this. So that is what this means right here. 1 euro is equal to 1.2042. Pay attention to it and don't forget that. The next thing here is major currencies in forex market. There are major currencies in the forex market. And if you follow this arrangement, it won't be hard for you to understand how currencies are paid. I can tell you that a lot of traders don't know how currencies are paid. Both professional traders, they just see it, but this is going to reveal to you how currencies are paid. And I'm going to explain in detail. So if you watch this video up to this moment, then it means you're following. And there are key things that a lot of traders don't understand, which I believe if you see trade the forex market, of course you can be profitable, but do you know the rudiments? Let me explain. Look at it right here. From these very major currencies, you discover this chart goes down, and that is how you pay currencies. I've arranged it this way so that it will be easy for you to pay it. It goes right down. The first one is the European euro, second one is Great Britain pound, the third one is Australian dollar, the fourth one the United States dollar, fifth Japanese yen, we have the Canadian dollar, Swiss franc, and New Zealand dollar. Now, this arrangement is based on how the market makers put it, okay? It's not that the euro is the most traded, no. Or the Great Britain pound is the most traded, no. This is where it's arranged, okay? And this is very important. So what that means is, you can't say USD is going to be a base currency for Australia dollar, AUD. You don't have that in the market. Why? Because AUD is higher in this scale compared to USD. So also you can have USD JPY, GBP. You can have it. Why? Because GBP is higher in the scale compared to USD. So also you cannot have GBP slash Euro. You can't have it. You can't have GBP slash Euro. Why? Because Euro is higher to GBP on this scale. I can tell you a lot of persons don't know this. This is how you pay currencies. As I am now, I can pay any currencies. I know this scale down and how it works. You also, with this, you can pay a lot of currency out there. So this is how it works when it comes to currency pairing. So these are the major currency. It is from these major currencies that you can pair currencies. We will come to currency pairing later, but I want to bring your attention to the fact that with these major currencies, pairing is easy. And without these major currencies, pairing can be difficult if you don't know them. So these are the major currencies that we have in the Forex market. We have minor currencies. All the currencies that are not mentioned in the major on this very side right here are called minor currencies. And you can mention them: Singapore dollar, Russian ruble, we have the South African rand, Gambian dalasi, Ghanaian USD, Cyprus pound, Chinese yen. All of them are under minor currency all the way to the downside. And this is very, very important as well. So pay attention to it so that you know difference between major currency and minor currency as well. The next one is major currency pairs. Major currency pairs are the major currencies combined with the US dollar. I repeat again, major currency pairs, look at it, pairs, are all the major currencies, that is this one, all the major currencies paired with the US dollar. That is major currency. So if I go back right here, you see major currency. The first one is Euro USD, GBP USD, AUD USD, USDJPY, USDCAD, USDJPY, and USD NZD. And if you look at all the currency here, they are all what? Major currencies. So these are major currency pairs because currencies are traded in pairs in the Forex market. Without them being in pairs like this, it will be very difficult for you to trade any currency in the Forex market. So pay attention to this as well, very important. The next one is minor currency. Any other currency that is not among this major currency right here, they are termed minor currency. It can be Euro JPY, Euro CAD, GBP AUD, AUD CHF, USD NGN, a lot of them write down, etc. Now you can go to some Forex brokers and you discover a lot of these, especially this, and this are listed under major currency pairs. Okay, that is their listing. Brokers have different way they list their currencies. They have the option to list it. So if they list it under major, that is also fine. But in the real sense, this is how it is. Very important. Let's move on to the next stuff right here, which is cross currency. Cross currency. A cross currency is a pair of currency traded that does not include the US dollar as one of the currency. So whereby one currency or one foreign currency is traded for the other without having first exchange into the dollars. Very important because traditionally, if you want to exchange a sum of money into different currency, the trader have to first of all convert that money into the dollars and then later convert it into the desired currency. So when we're looking at a cross currency, we're talking about a bypass. It's cross over what? Cross over the US dollar to the next one. Very simple. So it cross over from the US dollar to the next one. So it boycotts the US dollars. That is what we call cross currency, like is explained right here. You can screenshot it and get this detail yourself. Very important. So the next thing here is, what are these cross currency pairs? For example, these are cross currencies. We have euro, we have GBP, we have JPY, we have GBP, we have CAD, we have AUD, we have NZD. Now, what are the cross pairs for each of these currencies? We have, under this, we have this Euro GBP, Euro CHF, Euro CAD, Euro AUD, Euro NZD, Euro JPY. We have under JPY, we have CHF JPY, AUD JPY, GBP JPY, CAD JPY, NZD JPY. These are the ones for GBP, these are the ones for CAD, these are the ones for AUD, and these are the ones for NZD. So these are crosses. If you look at all of these, they have a common denominator, which is the US dollar is not here. That is why it's called cross currency. If you look at definition, a cross currency is a pair of currency traded that does not include the US dollar as one of its currency. Very important definition. So that is why it's called a cross currency. Pay attention to that. So when you are trading it, you know that, okay, I'm trading a cross currency. The next thing we need to look at in this very course is exotic currencies. So what are exotic currencies? Exotic currencies are currencies that are not commonly traded in the forex market. So when we say they're not commonly traded, it means that they don't have liquidity. There is not enough buy and sell pressure. There is not enough buyers and sellers trading this currency. That is why they are called exotic. So for the fact that there is no liquidity, there is not enough cash flowing into it, it's called exotic. And for that fact that there is no liquidity, the activity that you see on this very currency pair are very, very small. So they are called exotic currency pair. And these are currencies from developing countries, especially part of Asia, the Pacific, the Middle East, and Africa. All of these combined, their currencies are grouped into exotic currency. And the reason is because there is low level of liquidity. So therefore, there is very little activity, little buyers and sellers buying and selling this currency. That is why it is called exotic currency. For example, we have the South African rand, we have the Nigerian naira, we have the Ghanaian USD, the Gambian delasi, and etc, etc. What are exotic currency pairs? Exotic currency pairs are any currency pair with an exotic currency. I repeat again, any currency and you pair with an exotic currency give you an exotic currency pair. Let's say, for example, we have USD NGN. This is an exotic pair. Okay, this is an exotic pair. 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 If you look at it, you will find one exotic currency. You will find another exotic currency. This is an exotic currency. This is an exotic currency. Exotic currency. Exotic currency. So you call all of them exotic pair, exotic pair, exotic pair. Okay, so this is how you pair them. For you to call a pair of currency exotic currency pair, there must be an exotic currency in the pair that you call exotic pair. Very important. Pay attention to all of this. Is very, very important. I hope you gain something from this very video. Consider supporting this channel by leaving a like for this video, subscribe if you haven't already, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content. Join our Telegram channel, link in the description of this very video, and also in the pinned comment to receive more videos, signal, technical analysis, and more educational materials. Join right now, link in the description. And if you want to watch my other videos on the channel that is going to help you greatly, check this video out and check this video out. It's going to help you. Thanks for watching, and I will see you in the next video.